And we are live. What's going on, everyone? I hope you are well and doing great on this Friday. Fun Friday, old school throwback style CTM live stream here today. I'm looking forward to it, OG. It's going to be a strong session to close up this week. So let me just get going here and boom. We are ready to go. We're going to be talking about Today, we're going to be talking obviously about macro outlook. We're going to be getting into swing trading on Bitcoin and on Ethereum. We're going to be looking at dollar cost average strategy, dollar cost average plus strategy, what might be new and coming to the table. We're going to start off, though, before we get into, I'm going to start off with Ethereum today. Just want to note that yesterday, or this is 2 days ago here on the 11th, we saw, and this is the lead up here today to the SEC, whether or not they're going to appeal the grayscale conversion decision. Just a couple of days ago, we saw that once again, Cathie Wood's ARK filed to update their spot ETF application after submitting feedback questions from the SEC. The SEC was like, look, if you want to get approved, you're going to need to go ahead and answer this question. The question that they needed to satisfy was including some negative environmental consequential terminology. Mining operations can have can consume significant amounts of electricity, which may have a negative environmental impact. Now, the thing here is not whether or not that's true or not. It's the fact that the SEC wanted them to include it before they would even consider improving them. So the odds of any type of, let's say, GBTC conversion into a spot ETF at this particular juncture, I do deem to be, and this is just my own from a far view, a low probability. It seems that, even if they're not going to appeal, there's still going to be some things that need to be satisfied in their application before that is to happen. Many blessings to all of you today. I know that for myself. I am so grateful to be here with all of you, and we're going to be taking a look at everything. All right, let's start off today with Ethereum. And I want to have a little fun with it. And we're going to start off with, well, this is only like 60 seconds, 90 seconds. But since, let's start here and then we'll work our way in.
Treasuries, or are you going to rely on somebody that's willing to buy the short duration issuance of this? Because it's
ironically, that's now Tether as well. They buy more treasuries in Canada.
It is. It's the relationship that both of them didn't know that they needed to have.
Yeah.
Right.
Yeah.
And the irony of that is just wild. And so, do I like Ethereum? Do I like Tron or any of this stuff? Nope, sure don't. But I will say it is offering a turnkey solution for people to just stand up these stablecoin tokens.
But this is the point.
There we go. Doesn't matter what you like. It is offering a solution out there. And sure enough, it seems that one of the solutions that we're seeing, whether or not you're looking at Ethereum, whether or not you're looking at Tron, is a network for Tether, for these stable coins to offer a real world solution to people. And it's not really about what you like. It matters about what your goal is here. Let me start off with the goals. Let's set the bigger picture, and then we're going to get into it all. It is imperative to stack as many sats as possible. Number one, cold storage stash is your hedge against the system. Do I think that the system is going to implode today? No, I do not. Now, the title of that video we were just watching, though, was the debt spiral. And that's real. And when that paper was first released, the debt compared to what it is today was minuscule. That's real. You want to have that hedge in place. You also need a thoughtful dollar cost average long-term strategy. Notice the use and the placing of the word thoughtful. We'll come back to that in just a little bit. We're going to offer a little bit of help over there. And then, of course, number three, you need an advanced edge to maximize gains across markets. This is the blueprint to survive and thrive in the decade ahead. Just because Bitcoin is hope, just because Bitcoin is our hope for a fair and just monetary system, don't forget the goal is to stack as many sats as possible, right? So you got to be smart about that. Here's a beautiful chart of Ethereum. And it really inspired me in two ways. I saw this line over here that I'm highlighting, and then I saw the bottom of this channel over here. Now, the way that this chart was done and the T here between these parallel lines and these parallel channels is extremely well done. I like it a lot. And it reminded me of this chart over here that I had out in the lab. And you could see this is that line I highlighted and then the lower one. And then you see on this chart also these two other very, very high degree angle lines over here. And this was signaling a breakdown and then throughout. And why I wanted to spend some time getting into the nuances of this chart with you. By the way, I was trying to see if the angle over here of this line that you're looking at, if that was any type of way to determine when you're seeing a major breakdown occur. So I'd placed it over here, right? And then you can see resistance support over here. And clearly that's not correct or right or the best edge I could give myself, in that you could see a breakdown occurring much higher up. But again, that's why this is called the lab, and it gets really crazy when you start looking at all the way that the structure, whether it's this angle or this angle, plays throughout over here. But it did, just getting a slight visual over here, and you could see that we are testing that support right now as we speak. And you know what? It inspires me to just keep alive that pursuit of creativity, always looking to further our own skill set. And I'm going to leave this up here just on my desk so I could come back to it with a cup of coffee this weekend, spend some time and try to see if this is discretionary, but if I could add a mechanical, let's say, formula to it, I'm going to go ahead and play with that and report back to you. But I want you to see that we are coming towards the edge of this line. We have since gone ahead and tuned that up into real time. Let's take a look at it. And you can see that. So you can see, first of all, these are some parallel lines. You can see the 2008 all-time high from that cycle, and then hitting the 2021 high. And then, I'm sorry, I say the first of the two highs. So someone might not be able to see those parallel channels. Let me help you see them. We're here to help everyone and take everyone with us. But this is the May 2021 high. And then obviously the 2021 high was in November. And you could see that if I start bringing these down over here, and you could find for yourself, if you look to the left, you could see where that was tested as support. You could see then where price was trying to hold it again as support before it broke. And you're able to start seeing the structure of the market. And if I bring it down even further, you can see over here, you can see support and support. And this goes all the way down, resistance. I could extend that out, I guess, if I wanted to, like this. And you could see that we just had, you could see just held as support. Again, tested as support, resistance. Here's support. We've broken down below that. And I want you to see the greater structure here that I'm trying to play to you. And then you can see it all the way down. And if I wanted to, I left the middle line over here because this is where the market really found some strong resistance in it, right? And then this is where, even though we've wicked below it, we found support. Maybe, and I hope never, maybe we're going to need this line down over here. But either which way, I just wanted you to get a quick view of that. And then, right, I'm going to zoom in over here. You probably saw out on the Twitter that I was putting this chart out, and this is, you could see the pattern between the green and the red. It's an ascending triangle. And at the time, a lot of people were like, well, that's a bullish continuation pattern. And I was like, yes, if you're in an uptrend. And we're in an uptrend if you view it from here. But if you view it from the current moment that we're in, which is a tightening cycle, you could see that, well, that's a downtrend. But to me, neither of those things matter so much as that, regardless if you deem this to be in an uptrend or a downtrend, it's roughly a 60% chance it breaks to the upside and a 40% chance it breaks to the downside. But when it breaks, you have an edge to go ahead and manage risk off of. And you can see that it broke down. And then this is neat where it broke down to. And what I'm doing here is, for many of you, you already know a lot of this, but I'm warming myself up here so I could bring the fire as we get going throughout this session. You can see that price stopped right over here. What's neat about that is the June low on Ethereum. And then you can see that is the November low on Ethereum. That's just the trend line extended out. And that's where price was able to initially stabilize and bounce. And then you can see that it tested lower. As soon as it tested lower, all as I did was take this trend line over here and clone it, right? Right click, clone, and place it off of here off of one touch. And then you could see that that line was continuing to provide support. And then you could see that after it broke, it so far is providing resistance. It's amazing how that works, isn't it? So, this continues to be right now, obviously a continuation of a technical breakdown. It's continuing at this moment to go further. And what we've seen over the past couple of weeks is momentum shift to the downside, not just on Ethereum, but Bitcoin and also Cardano, the top three that we track. And here we are. Right? So I come down, bring this further, and I could say that, what happens if I do this before we get going? I'm just going to take that clone line, that trend line over here. I'm going to copy it, and I'm going to just bring it onto this chart, the one that we were looking at earlier, right? And I'm just going to bring it down off of the bottom here. So I don't know that is a good clean line. I'm just trying to get a look at it right now. So you can't see what my eyes were doing. Let me make this line a different color for you for just one moment. And I just want to show you what my eyes were doing. I went to find where we kind of stabilized. You can see we wicked below here, and then we tested it again. And then I can see the same thing happening over here, stabilizing. Again, 3 candles. And that's what I was doing as I placed the line. And I just want you to see it so that you could do these things by yourself. And you see this is where we stabilized. This is also where we stabilized. And it's kind of interesting if we look what's happening right now is that not only are we, look at that, that's kind of where market was finding support. When we pierced through it yesterday, the retest so far today, and the day's not over, we could get, just a headline that SEC decides they're not going to appeal the GBTC conversion. And again, why that doesn't mean that it's an approval, that could be like, algos and degens read the headline and start bidding up price. But right now and so far, we have seen a retest of that line and it's held. And it's just all interesting to me. I really think of it as such. And let's keep going over here. Let's move over a little bit to Bitcoin. I love this chart over here. What you're seeing in white is price of Bitcoin. And you're seeing this throughout its history. And then below it, this orange line, this is the shrimps. All right. Those that are holding less in a wallet, less than $10,000 of Bitcoin. And then in the whales, I'm sorry, I misread that. Those are that are holding. Sorry about that. My bad. I was just thinking shrimps, and I was thinking like along the lines of like I think it was Willy Woo's definitions of shrimp, and those holding, I believe, less than a Bitcoin is what I thought we were looking at. This says that shrimp holdings are less than 10,000 Bitcoin, and whale holdings in this case is over 10,000 Bitcoin. It is what it is. This is what Blockware Solutions is presenting as the chart. This is what we're going to go over. Nevertheless, first of all, 2 things are interesting to me. The first is obviously that you continue to see the more that we see the TikTok next block, and we continue to see Bitcoin running. Hail Finney, big shout out. You see that we're seeing a distribution occur from the large whales into what is deemed here as the shrimps. That's a good thing, and we hope to see, as this continues, that type of trend to continue on. What's also interesting over here, and one thing that I want you to follow here, is on the whales, and we'll start from 2016 and on. You could see that, and up to 2016, they're accumulating Bitcoin during the bear market. They're accumulating Bitcoin. As the bull market takes place and price starts rising, they're distributing their Bitcoin. You see that taking place over here, right? And, because you know what? The price, it brings in adoption. This is where you see that aggressive accumulation occurring from shrimps. Not right or wrong, just what's happening. And during the bull markets, they're accumulating aggressively. This over here was when Elon jumped into the pond and basically was like, Tesla will no longer be accepting Bitcoin because it is not, clean energy inducive or whatever. Nonsense, right? Not even true, but that's what happened. And you could see a lot of people got wrecked on that, right? And you could see that they use that as an opportunity to accumulate. But they were off of the bottom, and on the rise up, they were distributing throughout all of that, especially here as we saw the massive run up on Bitcoin into the fourth quarter of 2020, into the first quarter of 2021. The bull of all bulls was running really hard and strong. They were distributing, right? And you could see this massive accumulation. They took this as an advantage here to accumulate, right? But look what's been happening now. Look what's been happening now on this rise up, right? This rise up we've seen so far in 2023. We have seen some big wallets distributing over here. So that's interesting to note. I am going to deem those bigger wallets as smart money, only because what they've been doing the whole time is accumulating during bear markets and distributing during bull markets. That doesn't mean the shrimps are not smart money. The shrimps, for where they stand, they're obviously extremely smart money, and they're continuing to stack stats. They don't really care the climate. They're doing whatever they can to take their savings out of that devaluing fiat and put it into Bitcoin. And I deem them, because of that, extremely smart money. We already went off today about, obviously, that cold store stash, the hedge against the system, and how important it is. Let's talk a little bit, because it's been a long time since we revisited the thoughtful dollar cost average long-term strategy. And many of you are familiar here with the solution that last year in 2022 that CTM we were able to put into place. And what you're looking at over here, I just want to explain it to you very, very quickly before we move into the potential improvements and massive improvements. This is buy side only, spot only, but right? Does anyone have access to a dollar cost average calculator right now? And if you've been dollar cost averaging from the 2020, right, November the 8th, 2021 top, today, where are you? Are you above water? Are you underwater? Or are you break even? If anyone throughout this session is able to go ahead and find out what the answer to that is, I would really like to know. But from what I gather, you're about right now, about break even if you were dollar cost averaging throughout the bear market since the top of 2021. Now, I want you to think of this in a different way, and a thoughtful dollar cost average long-term strategy. And again, right, as people now begin realizing that Bitcoin is actually about the macro, that really what it's about is central bank policy led by the Federal Reserve. And, there's bull and bear markets. It so happens that is because of Bitcoin being a hedge against the debasement of the currency, the dollar being the reserve currency of the world. It happens to be whether or not central banks are in the midst of an easing cycle or a tightening cycle, as people are realizing that, there's a lot more to Bitcoin And maybe instead of telling people that like they should only invest in silver, gold, and Bitcoin, there are other ways that they could go about stacking more sats in a smarter way, right? And here's a smarter way to do that dollar cost averaging into Bitcoin. Do you see these gray areas? All as I want you to think of gray is out of market into cash. Okay. Again, if you've been dollar cost averaging on a monthly basis, on a weekly basis, from the top over till now, you're about at break even, and that's okay. I mean, it's a lot of time. That's over a year and a half. It's almost 2 years worth of time, actually. So, break even. But if you were using this as an opportunity here, not to be in Bitcoin, but to be in cash, right? Because, think of Bitcoin as savings. The whole idea is to save money, is it not? Is that what we're looking to do? Is to save money as best we can? And then each time you're green, you move into Bitcoin. So you move into Bitcoin over here, you're out. You're preserving. Now imagine if you were starting down over here and you've been building your stack the whole time, right? So now you're preserving all of that capital, that account, except, some small losses, 5%, some large gains throughout. Actually, if you've been doing that, you have not only a 24% gain with only 11% drawdown, because what was the drawdown from top to bottom? Even if you were dollar cost averaging, I don't know if it was, 30%, 40% at the bottom over here as Bitcoin was sub 16,000. Not sure exactly what it would be, but if you were preserving that capital the whole time and then adding not only what you were at the top, adding another 20% to that during a bear market, by the time we enter the next bull market, you are so far ahead because you haven't fallen behind. It's ridiculous. Now, CTM over here has been working on X Hypernova. We're not ready to go today, but I think tomorrow I'll be spending a large portion of my morning looking at that Ethereum chart that I showed you with a cup of coffee, and then doing the steps necessary to work on making that progress to getting CTM-X out. And yeah, so it's a good timing that I'm doing this. It's easier for me to do it all at once. These are buy side only solutions. There are two of them from that same period we just looked at, right? Which was a 24% return. This is the 11th. I'm sorry, in 2021, it's November 8th. And you could see the potential here. It's trading a lot more. This was only 7 trades. Here's the drawdown. Here's the return. These CTMX buy side only potential candidates over here. One thing that I need to point out over here, which is probably the differentiator here. This is done on the daily time frame. It's to make it easy for people. Like this dollar cost average solution is for people who really just want to be able to, like, from a very far, right? Whether you're a busy mom, whether you're a surgeon, whatever the case may be, just to have some methodical, thoughtful way to dollar cost average and do it in a way that's going to put you ahead. Because I have to be honest, we're going to take a look at the macro in a second, and I don't know what comes next. A lot of people like to look at the Bitcoin 4-year cycle and say, well, 2024 is up only, maybe not, and we'll look at that in a moment. So that's the reason you're seeing such a significant increase in returns, right? Because this is the 8-hour. If I did the 8-hour, let's do it. Let me show you what the buy side only is on the 8-hour, so we compare apples to apples over here. So I'm going to go over to the buy side only on the 8-hour on Bitcoin, and I just want to see from that date that we just took a look at, and I'll pull that date up with you in 1 second. So let me go ahead and I'm putting up over here, right? The 21st of November, and let's see what return we're looking. It's the same thing. Jordan, you just did the same mistake. That's why. Hold on. Let's jump over here to the daily. Now we're on the daily, buy side only. Is this time different? I mean, you know, when we look at Bitcoin, unfortunately, we're not looking at too much history. Bitcoin was born out of the Great Recession of 2008, and since then, we've only seen the Fed cycle play out. This is where QE was born, and we've never seen, outside of a technical recession in April 2020 that occurred as they had pivoted to outright quantitative easing. They were expanding the balance sheet by $4 trillion and then adding another $1.2 trillion in QE a year for the next 2 years. So, that like, was it a recession? Yes. Was it a recession that was happening during a tightening cycle? No. Was it part of the business cycle? Nope, not at all. And look, neither myself nor you knows what happens next. If all of a sudden something systematic breaks, I do believe that they have no choice but to come in and flood the system again. And if they do, and we're gonna look at that also. We're gonna be looking in just a moment here at traditional markets. We're gonna be looking at many things, but you all know that, and this is a great example. Looking at the 3 inflationary waves of 1970s, if something breaks today, and this is a great chart because we talk about it all the time. We talk about it all the time since July 2022 during the summer, when we called in real time that peak inflation. And then we talked about, and it's going to roll over. And then after it rolls over, it's going to stabilize. But the next time they run the printers, likely the next wave is going to be bigger. And throughout the decade, likely we have more than one wave. So whether or not we see actually 3 waves of inflation and a repetition of what happened in the 1970s or not, I don't know. We kind of figure this out as we go in real time. As the markets is taking in and absorbing an enormous amount of information, we're doing our best to do the same and stay on the right side. But if something were to break today or tomorrow and they needed to go in and flood the system, very quickly we would be looking at a much more rapid pace of inflation. It would be like throwing fuel onto a burning bonfire. As we're in right now, we're going to look at this, just come off of yesterday's analysis in just a moment, including where we looked for the breakdown, the target, look at the retest, and now we're breaking down and a retest is in play. So we'll look at that. It looks like to me today, we're seeing a strong risk-off environment taking place as bonds are bid, as equities are off, oil is bid. And we're going to have to take a strong look here at the metals, gold and silver, because as they were being rejected as resistance today, it looks like that they might be over the weekend, going into a weekend. Last weekend, war broke out. It looks like that you might be seeing people looking just to hedge themselves over the weekend. Whether or not any type of bid into the metals right now will be lasting, that's really dependent on whether or not they're able to stay higher for longer. Right now, this seems more like a short-term move, a bit of protection over the weekend. We'll get into it in just a moment, but this time could be different. I don't know if it will or if it won't, but here we're now on the daily time frame. Oh, I'm all over the place here as we're live today. I want to compare what it will be like on the 8-hour. I want to see the difference here on the 8-hour, because we're looking at the 8-hour on our new experimental CTMX right now. So let's do that. So, and it's wild to me. It's the same return as on the daily. That's just wild. But that's what it is. That's what we're looking at, and that's good to know because this is on the daily. So 8-hour time frame also offering that 24 and change % return. I didn't see the drawdown. I didn't see if it's a little bit lower or higher or where it is, but that's okay. These are rough sketches. Now, this is, remember we were talking about, and I don't know which one of these is better, This is looking at from the top of the last bull market. I have no idea. The drawdown and returns are same. There's only one difference in trades. If you go back and you look at the same two from 2016 to today, you could see that. I gotta see what that is for you. So let me just change the date here and make sure I have the date. I'm just going to look from 2016 to today, and we'll see what type of. So this is a 63,000% return, 241 trades with a 12.5% drawdown. So the drawdown on the blue one is higher. The amount of trades is just a little bit higher, as well as the percent profitable is roughly the same. They're so close. I don't know how you really make the assessment. It means that we're going to need to really dig in and look at what the quarter over quarter, year over year in all different market periods, what the consistency is. But I imagine that it's a coin toss. It really doesn't matter. They both are so close in performance and all around makeup. So, let's just call it, we'll go with the lesser. So not lesser drawdown, just lesser return, and a 78% return coming off of preserving all that purchasing power. Yeah, in this case, it would take a degree of effort, trading off the 8-hour. So my intention here is to keep this easy for those on the buy side that are looking to use this as dollar cost average. So as CTM continues to develop, one of the objectives here will be to be looking at the daily for a solution over here to put into a similar solution as we have over here on the daily time frame already in place. And I have to say, being up 24%, preserving all your purchasing power, that is a thoughtful dollar cost average strategy. It's not just on, obviously, this is it's not just on the dollar cost average strategy. We continue to look to progress. We have CTMX now also occurring on the 8-hour, as we talked about, or I just mentioned. You also need a more advanced strategy to maximize gains across markets. We're not getting into stock markets today, except we'll take a look at the indexes. All these positions right now on CTM are now short. We've seen a rollover in momentum from the long side to the short side. And CTMX here, let's just break in and check in. This is, by the way, just let me go a little bit slower. This is that same period, right? From the top over here in November. And this is trading both sides on the 8-hour time frame. And instead of preserving that capital, you could see across the board here a massive increase. It's why you want to have a more advanced edge in the markets. The progress continues here. This is CTM X for experimental. It's not forward tested yet. We're just forward testing it now over these last several weeks and plan to for a long time to come. We have a strong solution in place, but you see Javin over here coming off of the collective hive mind, collective collaboration after Javier dropping CTMX on the group over here, just continuing to work out those strategies. Hypernova, we are close to the goal line of getting that out to all of CTM. Maybe we're ready to go after tomorrow. I sure hope so. Let's take a look, and then I'll come back. We haven't looked at Bitcoin yet, though, and I just want to see what's going on over here together. So what I'm doing over here is I'm looking at, right? So as we all know, first thing I'm going to point out, and we were so early in looking for the bull market breakout, right? We were able to see, first of all, right? And this whole situation is hard, especially when there's lots of talk about lengthening cycles and whatnot, and able to de-risk down and then find the heart of the bear and then pivot and look for the bull market breakout and then watching that occur and being on the right side of that. It doesn't mean that we're going to see normal 4-year cycle behavior and that we don't run into any type of turbulent times. Right now, this line over here, this is the bull market breakout trend line. As long as that holds, the bull market is technically intact, right? So we could see what would be a very normal correction occur in Bitcoin. Right now, we're at a 17% correction, nothing, right? Into the trend line, 23% correction. It's still well under what a normal expectation for a correction would be during a bull market. But the trend line here, that offers what I call a technical breakdown of that bull market. And then we would see, as we've already begin seeing near-term momentum roll over, it could, depending on what's going on with the macro, it could potentially escalate, or it could just be a perfect accumulation period, and actually price just go sideways before going up. We don't know. We take it in real time. But you could see that we just broke down from this trend line over here, right? This green trend line. We've seen a breakdown. We went short exactly on the breakdown of it. And, this continues to hold over here. It looks like that there is light support. You could just follow the mouse crosshairs over it. I think there's heavier support in this area around and just above 26,000. It's trendline support from this breakout, that purple line you're looking at. It's also horizontal support where you found support right over here after building this nice bit of resistance for a while. So that would be a very important place to hold. I don't think we see any type of resumption until this outer trend line over here, that purple line here, is broken to the outside and specifically above the support over here at 27,500. So markets right now, let's build this into the regular markets. Let's start over here with some thoughts from Jamie Dimon. And Jamie Dimon is saying that, look, the persistent tight labor markets as well are extremely high government debt levels with the largest peacetime physical deficits. There's a lot to unpack here. So I'm going to go slow. All right. U.S. consumers and businesses generally remain healthy. If you remember, our own personal view was in 2022, as the rate hike cycle began, that nothing was about to break and the economy was a lot stronger than expected. Now, there were far and few between who embraced that at the time, right? Then, after the first quarter of 2023, said, you know what? Now it looks like we are headed towards a slowdown, towards a recession, towards a hard landing, except there's probably going to be some time, right? And now we are getting close to the end of the year, and we are seeing strong signs of that actually occurring. Now, it doesn't mean that we cannot pull off a soft landing. It still could happen, and we are still data dependent. If we were to see any type of increase in payrolls in the job markets and a trend of that, that would be a clear sign. And obviously, if that were happening, I imagine you would be seeing GDP continuing and also on the rise. And, it is possible, but it looks like there's a higher probability that we are going to enter into a recession. And the question that remains is whether or not they allow that to happen, whether or not, and I think that they're going to, unless something breaks. Now, trying to time when something breaks, that's almost impossible. However, during a tightening cycle, when they're pulling away liquidity, when credit is tight, it is not a black swan for something to break at all. It's almost expected. So the U.S. consumer remains healthy. Don't forget, we've seen some real things occur. This month, we've seen the return of people having to pay back student loans. That puts more pressure on them. We're looking at credit card debt being at record levels, as well as credit card rates. And we are seeing another troubling sign, people going into and taking money out of their 401ks at record levels. I do not think that the consumer is so healthy, but we are data dependent. Next week, if we look at the calendar, we have retail sales. We'll be watching to see for a sign about whether or not how well the consumer is doing. And then we have probably what I deem to be the most important thing. Now, CPI is not that. We were looking for the deflationary forces to level out. just as we top ticked it, we bottom ticked it, but that doesn't mean that we're seeing a reignition of inflationary forces. We're just seeing them level out, right? So the job market becomes one of the most important factors in this puzzle to consider. Because if we're going to enter into a recession around this time, we're going to start seeing a strong decline. So we have next week not only to see what the consumer is doing, but we have unemployment claims, and Powell's scheduled to speak right after. That's interesting to me, right? We'll see what happens. So I don't think, as Jamie points out, that consumers are so strong, but we do have earnings coming up. It'll be really good. We are data dependent to see where indeed that companies stand, where businesses stand. So that's going to be a good indication coming off of not just what their earnings were, but more importantly, how they guide forward. Consumers are spending down their excessive cash buffers. However, persistently tight labor markets as well as extremely high government. So when we talk about the persistently tight labor markets, it's a good nuance to bring up over here that people holding 2 full-time jobs is at a record high. That doesn't seem healthy, like a healthy job market. That seems like a desperate job market. People are suffering. It's why we do what we do. It's why we talk about not only the importance of Bitcoin, it's why we not only talk about the importance of saving in Bitcoin, but it's why we spend our times forming strategies that do it in a more thoughtful way so that people can not only survive what is coming, but they could thrive. But it does take work. I know that some people don't, other people love it. Where the people that I'm surrounded by are not only extremely talented, extremely intelligent, but they're really dedicated and hard workers. We just have our head down working all the time. And then it's like, you look back and like, oh, those are the fruits. That's how it works. We got to keep going over here. So the extremely high government debt levels in the last week, we went in the U.S. from $33 trillion in debt to adding over $500 billion in just a week. It's absolutely insane, but I don't think that these are peacetime fiscal deficits. I don't think that anyway. That's Captain Obvious, and everyone, whether or not we're all aware of that. We've talked about it so much throughout 2022. We don't need to get into that, but for sure, financial warfares are being fought. If you remember, it was not even a year ago that the U.S. and European Union confiscated all of the peoples of Russia's central bank's reserves. That is not peacetime actions. That's not peacetime moves, either which way. Now, increasing the risks of inflation, the large deficits, the government debts increases the risk that inflation remains elevated and that interest rates raise further from here. Listen, look, Jamie has been very consistent that he thinks that, potentially we are going higher, 6-7% even. Right now, the markets continue to price in the Fed on pause. November meeting is all but locked in. December as well is leaning towards a pause. That it's variable, as well as January. I wouldn't be surprised if they raised, but right now the market is not pricing in any raise. And if you remember, the day after the August press conference from Powell, we said, you know what? Did you hear his tone? He's shook. The credit market's tight. They're gonna pause. They're gonna pause in September. They paused in September. Our expectations are that was the pause, but we are data dependent. If things change, it could go the other way. And the other thing that we thought was, well, the market's going to start pricing in the cuts sooner than currently the market's pricing in. Jamie's saying higher, and he's saying for longer, which I'm not going to not listen to him. I'm not going to, we're going to consult it, but you see the market right now is beginning to price in that first cut into June, right? The highest percentages right now is a cut into June. And in May, so June is right now where the market is pricing that in. So it could go either way from here. Completely data dependent. My expectations are we do have some favorable seasonalities coming into the market, not when looking at the stock market and how it performs at this time of the year, but I'm talking about whether or not it's the job market and we're seeing some seasonal hires, whether or not we're seeing that discretionary consumer spending as people go out and, they spend for the holidays and everything that takes place and vacations and tourism and yada, yada, yada. But it's coming into the first quarter of 2024. This is going to be the make or break it time. This is for what happens. I truly believe that. So we'll continue to wait and we'll watch and we'll take it as it comes. What else did Jamie say before we move into looking over here? We do not know the longer term consequences of quantitative tightening. Listen up. The risk is to the downside right now, which reduces liquidity in the system at a time when market making capabilities are increasingly limited by regulations. Right now, we are in the midst of a tightening cycle. People like when liquidity is coming in, they're like, oh, follow liquidity. Bitcoin follows the liquidity. We're going up. But when it's coming out, you don't hear anyone talk about it. Now, what we do is we try to look at the market as unbiased as possible, realizing that we all have all types of biases, but we try our best to be able to take away all of those biases and look at what's happening. Furthermore, the war in Ukraine, compounded last week's attacks on Israel, may have far-reaching impacts on energy and food markets. That is real. The worry and the concern, and that we've been noting them since the summer, is what happens if these two specific areas rise. What will the Fed's reaction be? Jamie is talking about he believes their reaction is going to be higher and for longer. My interpretation, I do not mean to in any way, shape, or form put myself on even in the same conversation as Jamie, but Jamie has self-interests. Again, we got to talk about everything, put everything out on the table, right? So I'm just trying to look at this as someone who's just trying to navigate these markets as best as possible with the information we're given. I don't think Powell is going to be able to continue this aggressive rate hike. We were, as far as I know, October 16, 2021, the only one in the markets to talk about a coming rate shock, in quotes. Bitcoin is not immune. I don't know what happens. If they keep tightening, something is going to break. Now, maybe that's their intention. Maybe that's what they're looking for. That will bring down and definitely simmer out all of these inflationary forces, but there will be a lot of pain. I don't know. Anyway, global trade and geopolitical relationships. This may be the most dangerous time the world has seen in decades. And Jamie here echoing the one thing that we've been consistent about, trying to be humble in knowing that these are unprecedented times. These are unprecedented times. We just saw, in our lifetimes at least, we just saw a 40-year trend of the bond market break. We are entering into monetary reset this decade. We are seeing fourth turning events occur around us. We are seeing the debt spiral beginning to exponentially grow. Do not think for a second that you have the answers and that you don't need to be more alert than ever, working harder than ever. Let's take a look at what's going on in the markets. So we'll start over here, and we're just going to pick off where we left this off yesterday. As we were watching yesterday, this is exactly where we left off yesterday's stream. We were seeing that markets had came into resistance, having a little bit trouble breaking above that resistance. And then as we left off, we were like just piercing the sell impulse line that we drew in. So let me come down to a 2-hour time frame. We were just piercing this. And we said, well, likely we're targeting this area right over here. That session it unfolded, tagged the broken resistance, now becoming support. You could see that line of resistance over here. Breakdown. And that right there is a beautiful trade. That's the only one trade you need to make the whole day in order to have a fantastic session. Hits the area, bounces, and look at that. It not only bounced, it then comes up and then finds resistance on that broken line of support. Resistance, 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 resistance. Comes down for another retest, and then overnight bounces up again. Tests that resistance, and now we're breaking below what was a breakout of resistance becoming support. It was tested once as support. Then after breaking, it's been retested. That support is being confirmed back into resistance. Right now, you have what I would deem to be, look, it's a Friday, markets are down 1.5%. We're seeing bonds are bid once again. It looks like a classic risk off today, but it looks not like a classic risk. It looks like a geopolitical risk off day today, as you are seeing gold also bid over here. Ace is bringing it up. Thanks, Ace. Thank you so much for getting that done with the two images. I'm going to bring them up. I'm gonna come back to that as soon as we finish this look at the traditional markets. That would be a great place to end. Ace doing it from November 21st and November 22nd. $100 weekly buy on Bitcoin. I want to see what we end up with. But yeah, we have strong rejection at resistance. By the way, this line of resistance that was drawn in over here that you're looking at, that was another one-touch trend line drawn in off a clone. I took this line, I've cloned it off of the false breakout over here. We had this line over here, and you could see that that's where price found resistance again. Do not let anyone tell you that you need 3 touches to confirm a trend line. I'm telling you, they have no idea what they're doing or how markets work. One-touch trend lines all day long. So what's happening now? Well, we're going to have to look at gold. We're going to have to look at silver. We're going to first look at the dollar. I know we came in, again, trying to figure this out in real time. We went aggressively short over here, invalidated. Long over here. We could have done better. Breakout, retest, resumption after a false break. This was the place to look for longs and look for them. We waited to over here. It was still way earlier than most. And then what we did something was very unorthodox. Last Friday, calling an exit on that trade. And we're just waiting and watching. The only way that we go back bullish, or that I go back bullish, is if we take out this trend line. These trend lines that you're looking at go back to 2008 when QE started across the dollar. Let's give you a quick look. You could see they go all the way back to 2008 when QE started. They are on linear. They are not on log. I know that people say you can't do that. You have to have 3 touch, whatever. We do what works over here. And you can see over here that so far we're finding resistance on that broken trend line. I see it as resistance. If we reclaim this area over here and then confirm that into support, then I'm going to be looking for further upside extension on the dollar. Right now, remain neutral, right? Just exiting a position, waiting and watching what could happen. Yes, absolutely. I'm with you 100%. I understand that what you're saying. Same thing happened over here. That same Friday, we said, you know what? We pushed this trade, flipping long, short, long, staying on the right side at a critical juncture. This is a descending channel breakout. And this is like, all it takes is a couple of good trades a year. Here's one of them. And up, taking profit, 24% on bonds, insane trade. And just getting over here, neutral again, not yet going, looking to buy bonds, waiting to see what happens. They could kick back up. I wouldn't be surprised at all. I do believe that we are headed towards a intermediate trend and a bid into bonds. That is what I'm seeing happening in the market. That lines up with if we are seeing a further slowdown occur, and if we're going to see actually the potential rate cut move up earlier from June, and into May, or even further than that, up in the year, that all aligns. If we're higher for longer, though, as Jamie says, and we're going to 6 or 7, this will be wrong. As we looked at the dollar, a place to look at where that trade reverts back towards the long side. I don't yet have it on the 10-year, so I'm not gonna force it and or put it in. I'll wait until something's clear, and then I will add it. If we get a breakdown of the green line over here, that's a bit of a confirmation, and then we should see some further acceleration. And really what we would just be seeing is after this breakout, it's nothing more than a reversion down towards the mean. So that's normal market behavior. This is, we'll look at this another day. I'm not going to look at this now. We tweeted about it earlier in the week, but what I wanted to look at is gold and silver and see what's going on over here. And well, before we do, let's start with oil. All right, so the oil is a major breakout occurring. Let me start on the daily over here. And if you've been following with us all week long, and man, I wasn't watching this, I'm not trading this market, so I wasn't watching it. But this trend line we had over here all week, we said if we break out over above it, that's the place to look for the buy. You could see that happening here this morning. And this is now after we saw that massive sell-off, an extension here of oil price. Now, I do think this largely is like the gold trade, a geopolitical trade right now. And you know, if things continue to escalate, specifically if Iran is pulled into the war, this is going to, well, we know that if we break above 94, we're looking for further legs up. And I don't even talk about how to try to price all that in right now. That for me is the most difficult thing to price in right now if we were to see a resurgence in energy prices. But here we go, technical breakout in effect. For those that were ready for it, that's a good one. We'll watch and see what happens. If we see a de-escalation in tensions, gold and oil likely give back their gains and quickly. You know, that's what I think. Now, the first escalation is not Iran is dragged into the war. We could see something like a multi-pronged war. We could see Hezbollah entering into the war from the north. At that point in time, also fighters from Syria, like that could be the first stage of escalation before we see something further. Let's look at gold and silver. I was looking at yesterday here. So we got a major breakout occurring. So we talked about this yesterday in our session. Everyone's prepared for it. But yesterday, this was a rejection into resistance. So hold on one second. You see that green box? Price had come down, and we were looking for a rejection from that resistance to enter the short trade down towards the trend. That trade triggered. That trade looked good, accelerating in price. And we talked about where we're wrong. Where we're wrong was above the inner line over here. And then outer line over here was a reversal in the trade and a breakout to the long side. That is well right now underway and beginning to accelerate. Again, I think this is geopolitically driven. So same thing over silver. Silver not yet igniting on the long side, but you could see that short over here was looking to be taken off of the rejection of this resistance. And then that trade whacked out over here. We're into an area of confluence of resistance coming from the downward sloping line and this upward sloping trend line over here. If silver breaks out as well, at that point, I think that we're back towards testing up towards 24.5. Ace, let me go ahead and check in what you were able to share, and we'll build off of it like that. So let me pull back over here what we were looking at. Let me just jump into the DMs over here. Maybe I could pull up Discord without having to log in. There we go. So just one more second and pull up. Oh, beautiful. You got it from hold on one second. I'll explain as we get there. Let me pull up the 3 charts though. That's 1 or 2 charts. 2. Let me take this off. So this is coming from Ben's dashboard or at over into the cryptoverse .com and to access this, right, the dollar cost average, this is on the free tier. So if anyone wants to go ahead and be able to access this tool, I believe you could just sign up and be able to access that. And so we're looking at over here starting on the 11th of 2022. So you're picking the bottom. Ace, could you pick over here 2021 also, which is the top of the bull market? So we go the entire bear market. You're looking at where we call the bull market breakout. And if you were dollar cost averaging from the bull market breakout, you would be up 16%, which is great. So, and if you were, okay, you have it over here. My bad. So let me do both. Let's do both. If you started dollar cost averaging from November the 1st, 2021, you are currently up almost 4%, 3.89%. Okay, so you're very close to break even. That's if you started dollar cost averaging at the top as opposed to being up 24%. The difference here also off the bottom, if you started dollar cost averaging off of the bottom, so you have November the 1st, you're up 16%. Let's take a look at where we would be if we were to go ahead and do that. And so going to November the 1st, 2021. And you would be up 39%, right? With a 2% drawdown. So obviously doing a dollar cost strategy in just a thoughtful way. By the way, I can't imagine what it would be for these beasts. I'm going to find out right now. I'm just going to take this one over here. I'm going to look at the same time for the November the 1st, 2022, right? Not much of a difference. Not much of a difference, 47%. Right? Again, that's the 8-hour, not the daily. I'm looking forward. CTM Hive Mind working out on the daily dollar cost average strategies. This is buy side only. This is for those that are without leverage. Imagine these type of potential returns without any leverage. Buy side only is more than enough to get it done. But clearly you can see the immense advantage instead of a 16% dollar cost averaging return, right? Being able to pull from the market 39% and better, you're out of the market preserving that purchasing power. Because right now, if we were to see a break of 24,700 and come into like 22,000 or something like that, you're preserving your purchasing power the whole time rather than watching this number drop the whole time. So that's the advantage. It's a massive advantage. There's no question about it. Interesting. I did not know that. And then we saw that there's for sure communication this week that Russia plans on throughout 2024 continued production of cuts. Those thus far have been in lockstep with Saudi Arabia. So now we are seeing Qatar also. What's interesting about that is that they are the ones that were the intermediary between the $6 billion, is it $6 or $7 billion payment the Biden administration was handing over to Iran, which Qatar has frozen. They're not doing that yet. They're not doing it now. For right now, they're not doing it. So it's just interesting that they're kind of playing both sides of the table here, right? Qatar, at least. And I find it all fascinating. Eat ramen, buy Bitcoin. An ETF approval into next cycle. When I talk about next cycle, I just want to talk about one difference here. When I talk about next cycle, I'm not talking about it in relation to the Bitcoin halving. I'm talking about the next time that we're seeing easing taking place. Right now, we're seeing tightening take place. Rates are high. Whether or not they continue to raise, that's an unknown. Rise, that's an unknown. And how long they remain high remains unknown. And credit's extremely tight. And people's funds are starting to dwindle. We're in a tightening cycle. The currency is not being debased. It will return to being debased. When it does, we've entered the easing portion of the cycle. When we enter the next easing portion of the cycle, if a spot ETF is available, we are looking at a mega cycle. And I think that because of the largely adopted diminishing returns type be understanding of what has taken place, which to date is 100% intact, massively intact. We're also seeing diminished volatility here on the downside so far. Instead of 84% drawdown, instead of 85% drawdown, 76% drawdown. She's coiling. It could be a big one. If the debt continues to spiral out of control, and it's going to, if we continue to see mega on-ramps opened up, that would be a spot ETF approval. We could see a mega run occur. But the question is when does that mega run occur? And that is right now just about everything. By the way, I mean, well, we don't have to talk about what potential downside could be because right now the bull market breakout is still in effect. But we will if need be. So I thanks for being here. What a fun Friday. What time well spent to be here with you all. If you're new here, welcome. This is Jordan with Conquer Trading and Investing. Go ahead and subscribe to the channel. Hit that bell icon. If you stayed to this session to the end over the weekend, if you watched this replay and you enjoyed being here, please share what you enjoyed most from this session or share some insight with us all. God bless you all. Have a wonderful weekend, everyone. I'll talk to you soon. Yeah, it's not going back the other way. And the system has been broken for so long, and there were so many people so keenly aware of it. I mean, going back to when they took the dollar off of being backed by gold. People talking about deficits in the 80s, debt in the 80s, and the thing is they were on the wrong side of the trade. And how much longer they're able to keep the music playing, that's another question. Monetary reset is happening. We got to stay in front of it. Absolutely. What a joy. Have a beautiful day, everyone. God bless you. I'll talk to you soon.